Hi everyone, welcome to the US CPA classes for regulation exam. This is part 2 of US individual taxation for gross income. In this video, we'll be discussing in detail about rental income, royalty income and the gambling income. So let's dive into to understand more in detail about rent, royalty and gambling income.
So two things. For example, if you are hiring artists for any like the show, right? So that is being considered as a professional income, not the royalty. On the other side, if artist has like composed any music and they have made any you can say what do you call it, movie, or maybe any what do you call it, like I'm just missing the exact name, like audio recording or something like that they have given on like Netflix or maybe to Amazon Prime to for this, right? So in that case of scenario, they are getting the royalty, or I would say the uh, per usage charge is being considered as like royalty income. But if it is for like any show, right, then it is a professional income.
I have one more example, sir. So, for example, if we are receiving payment for the use of copyright, then it's royalty. But if it is for the use of copyrighted article, it is not royalty. So generally, this is the issue in taxation that we see: use of copyright and use of copyright and use of copyrighted article.
What is the difference between these two?
So basically, copyrighted article. For example, if I'm using a software which is copyrighted, then it is going to be a purchase, and the payment would not be considered as royalty. However, when I'm using a copyright, that is to make further process, basically copyright of a process or a technique, which enables me to, further make something.
Yeah,
Then
you are
it's
right.
royalty.
Yes, you are right. For example, like Microsoft, they directly sell their licenses to use, right? For them, it's like license income, not a royalty income. But for example, like Microsoft has created some like specific category of system or computer which they have, which let's assume like your company has purchased as a processor for any particular usage, and on each usage they are paying royalty. So that may be royalty. Yeah, you're right.
Thanks.
Cool. Okay, so the royalty are included in the gross income when it is received. So from the tax purpose, it is on cash basis, on receipt basis, not accrual basis. And rental income include all amount that receive as rent, whether in cash basis or accrual basis of accounting, whichever the method you are choosing. Any owner expense paid by the tenant is also being considered as rent. Advance rent will be recognized in the year received when even while using the accrual method of accounting. So if you are receiving any advance rent, right, despite of the fact that you are using accrual method of accounting, but if you have received the advance rent, it is being subject to tax in the same year. Or non-refundable or adjustable security deposit, right? Most of the time we all pay security deposit to the landlord, and it is generally adjusted against the last month rent, right? So those non-refundable or adjustable security is also be considered as taxable in the year of receipt, right? If you see right hand side, the refundable security deposit are not taxable, right? If only the refundable security deposits are not taxable, but non-refundable security deposit or adjustable security deposit are taxable in the year of receipt. Rental income from personal residence is considered when rented out for more than 14 days. The rental income is recognized and the expense must be allocated between personal use and rental use. So three things here. First is the royalty income, which you all agree, like on a receipt basis. Second is rental income. Rental income also more or less follow the receipt basis. If you have received advance rent, so it should be taxed in the year of receipt. If you have received any non-refundable security or adjustable security, that also being taxable in the year of receipt, right? Only the refundable security deposit is not subject to tax. right? Another thing, if you see last statement over here is about 14 days. So here, if like, have you heard about Airbnb by any chance?
Yes.
So
Yes, sir.
any idea what they do?
People are renting out their houses.
Yeah.
Yeah.
So you won't believe it, like in India, the concept of this OYO has came from Airbnb actually, right? So like initially they also started like Airbnb. They have tried to reach out to few home. If they like, first let me help everyone understand like what Airbnb do. So in US, what Airbnb do, like in your home, let's assume if you have any extra room available and you wanted to rent it out, so then you can register with the Airbnb and they will help in bringing the customer for you for the respective days like a hotel. So Airbnb is like bed and breakfast basically, right? So same concept, like the OYO has initially started with, but in India, like people who are not comfortable bringing any unknown person into their home, right? So that the reason, like 15 years back when the OYO has started, it got flopped initially, right? Then after they applied this formula with the hotels chains, which is like small hotel chain, and then slowly and gradually it picked up, and you have seen like now it's like he's coming in Shark Tank also, right? So so Airbnb, what they do actually, like they agree with you that this particular home on the this particular room of the home will be allocating to the Airbnb, and on the Airbnb platform the people who are looking for any bed and breakfast services, they can come and they can pay through the Airbnb, and Airbnb charge their commission and pay the remaining balance to the respective homeowner, right? So that's what the overall concept is. So in that case of scenario, in the entire year, if you have rented out for more than 14 days, then it is considered as rental income. If the total rent is for less than 14 days, it can be part of other income, right? But for those rental income, when you're considering that as a rental income, the proportionate expenses are allowed. The proportionate expenses may be your mortgage loan and trust, maybe your household expenses, maybe your grocery expenses, maybe your electricity expenses, right? Maybe your internet expenses proportionate to that particular room. So that are allowable expenses. Make sense? Yes,
Yes.
no,
Yes.
right?
Yes.
Okay. Next one is gambling income and losses. Any idea what is gambling is all about?
Windfall gain.
Any other? So in US, like the casinos, or you can say, horse race,
Betting. Yeah.
bettings, like is being very much popular. Like almost
Yeah.
in all the big city, you'll see the casino, especially like Las Vegas is famous for it. Atlanta is famous for it, and like many other states are extremely famous for like casinos and nightlife, right? So there, like people do a lot of gamblings, right? And even though you won't believe it, in almost all the gas station, like in India we call it petrol pump, in US we call it gas station, right? In all the gas station, grocery shop, there is always be a lottery shop, right? Those lottery also being part of the gambling income. I don't know, like in your school days or maybe in your earlier days, do you have any experience of lotteries or not? Any of you have any experience?
So scratch
Yes.
card day.
Yeah,
So
yeah.
basically we used to
Yes.
get that scratch card.
Yes.
Yeah, yeah. So, like we did in our like school days, we were very excited about those days. But in US, it's still there, and you won't believe it. Like when I was in US, like people are the age of 70 year, 80 years, 60 year, 55 year, like everyone when they come to go to grocery store, they buy at least one or two lottery to try their luck for the day. Right? I don't know. Like even though it is being starting from like $1 to it goes up to $200, but
Mhm.
almost like many of the people I have observed, like they go for a lottery to try their luck every day, right? So all these incomes are being considered as like gambling income, right? So for those income, what expenses should be considered as allowed expense? So ideally, like all the gambling winning are included in the gross income, right? However, under the TCJA Act came in 2017, so there are some expenses which TCJA Act has approved to consider to be deductible as a from the gambling income. So if you see right hand side, the losses are deductible as an itemized deduction, but only to the extent of winning. So if you have gambling income and gambling losses, so gambling losses only to the extent of gambling income can be adjusted, not beyond that, right? Under the TCJ Act 2017, the law is clarified. For example, an individual expense traveling to and from casino are only deductible to the extent of gambling winning. That is, there is no separate deduction for expense incurred in the winning of the gambling income. So if you have gambling income and you say like I spent a lot of money on drinking or food or maybe like any other activity in the casino which you have done, so those expenses are not allowed. Only coming from home to casino, going back from casino to home, only that travel expense is being allowed, right?
So
Other than
specifically to I'm sorry,
yeah,
please
please.
continue. Only to casino and no other place, right? Because there are lotteries available at other places.
Yeah. For example, casino, or if they are going for betting to the horse race places, right? So only through and fro travel expenses being allowed, I would say.
Okay, no, but you were saying like there are lottery tickets at the gas stations as well.
Yeah,
So
yeah.
so
No, like
those expenses.
those are not, because normally you are going to gas station for like for refilling your gas. So you're not specifically going for gambling.
Okay, plus I have another question. For example, if I'm not gaining, rather I am incurring losses, then
Hmm.
also the
Those
expenses
losses
get
can be
allowed.
carried forward. Those losses can be carried forward in future year when you have gambling income. You can set off.
So basically, for example, if I have incurred a loss at a casino, plus that loss would be increased by the expenses in to and fro that I have incurred, right?
Yes.
Yeah. Okay.
Maximum to that extent. Right? Okay. So we have 1, 2, 3. I think we have a lot in income. So maybe we can take a cutoff here for today class. You all have these notes, so I would request you to go through the notes, and then in next class we'll continue from point number 6, which is income from waiver of debt. So in the next class we'll target to cover all the income on Saturday, and then on Sunday class there are special category of income that we'll be covering, which include like installment income, cryptocurrency, and then I think we have individual retirement account income, and there is non-business bad debt income. So those are the 4 category of income which we'll target to cover on next Sunday. So by next Sunday we'll be done with incomes, and then following week we'll start with the assets, right? So this is what the plan. So first, next Saturday we'll finish all journal income. Sunday we'll target to finish all the special category of income, and then following week we'll starting with the, I think assets already we have covered, sorry. So we are done with income after that. Yeah, then we come to the exclusion part of it, right? Any doubts so far which we have covered today?
Can you provide the note today?
Yeah, definitely. So I'll send it again. So I've already shared, but I'll send it again now. Right?
44 up to 44 I have.
Yeah, okay. I'm sending right now. Okay, so enjoy the rest of your Sunday, and please go through the notes. And now you all have learning management software access of KC Global also, and some of you have already been studying through the Surgeon, which we were selling earlier, right? So please go through the respective topic in your respective learning management software. Do some practice also. And if you have any questions, so first we can cover those questions in the next class, and then we can take it forward.
Sure.
Sir, can I give you a call after this class?
Yes, please. Yes.